Hey guys, how's it going? Welcome to a trade slash session recap for Euro Dollar on Wednesday, the 7th of September, 2022. So daily charts obviously in a clear bearish trend. However, after that last swing breaker structure, had a bit of a corrective and choppy pullback during August, right? Low volume, not too surprising towards the end of the month. And then we started to sort of sell off. Yesterday, we sort of struggled to break this low here, right? Fell to close below, pull back up into this daily inside bar. So we know there's going to be some supply within there. Essentially, that's our 4-hour supply zone, right? Which we'll take a look at in a minute. So price tapped into there yesterday and then started to sell off. But again, really kind of struggling to break these lows. We're starting to see those wicks coming in. So, there's nothing looking too clear in terms of like a sort of a more medium-term outlook other than just where we are. Overall, everything is still bearish. So, the path of least resistance is to the downside, but at some point I will be expecting we may see a bit more of a clean and sustained pullback. But whilst everything is bearish, all the flow is bearish, shorts are, for the longer term outlook, probably more on the cards. We might see a bit more of a dump through until we at least sort of get a daily change of character or something. Then we can start to anticipate that bigger move. Because if we look at the 4-hour chart, it's a lot clearer. Because here, go to annotation for a minute. Here we can see, well actually, we'll zoom out for 1 second. We had the same swing range as the daily chart, right? So we had this large pullback and then that break of structure to the downside. Then we had that pullback up to supply. And then we had an attempt at breaking and closing below the low. Just zoom in. But failed to do so. That was yesterday and Tuesday. Then we pulled back up into that supply level. And then we had another dump to the downside. So at this point here, we did obviously finally have a break and close below the actual swing low. But when we get price action like this, where yes, we've definitely had a bust, it's mechanical, so this becomes our new swing high, etc., etc. But if I look at the most recent low, again, what happened? Price came down and it did close below our actual true swing low, but it's failing to close below this low, right? It's kind of just come down and swept that low again. So it's just a bit messy to interpret, because what that means is that like bears are really struggling to force price down and close below. This is showing bullish pressure starting to come in. Now, does that mean I necessarily expect price is going to do this? No, not necessarily, right? On the balance of probabilities, my bias is definitely still to the downside, and my main forecast would be price coming up into this level, just expecting the supply chain to hold, and we'll continue down. But more and more bullish confluence is starting to kind of rear its head, right? Because we're struggling initially to break past that low, then we struggle to break past this low, right? We're building a ton of buy side liquidity above. So I wouldn't be surprised if at some point, right, we maybe potentially start to break out. But until that happens, I'm happy to keep following this, right? And look for shorts from within here to target these weak lows, because at the end of the day, these are still weak lows. They haven't, broken any highs. So that's why the bigger picture play is still to the downside. But when you start to see this bullish pressure coming in, that can give you a little bit more confidence if you want to start to play those longs, even if it's just up to these levels, or potentially if you want to be quite brave and anticipate the breakout of those supply zones. So just a type of environment where you kind of want to be looking for those in and out day trades rather than looking for like, is there a 4-hour or daily move I can catch it? The only time I'd be starting to think about that is if we came into this level, then maybe you want to target down to just this low here. That'd be about it. And if we start to break these supply levels, okay, now we can target those bigger moves up towards the highs or potentially beyond. So M15, sort of a similar situation in terms of we had our swing low here. We pulled back up to premium level of supply, right, just above the EQ in the 4-hour supply there. And we had a very nice aggressive sell-off yesterday. However, what happened? Fell to close below the low, right? And that's where we're seeing that bullish pressure coming in, right? Nice V-shaped reaction, bullish change of character, giving us this demand zone here. Now, again, technically, if we draw our swing low line across, what can we see? We can see on this data feed, at least, we did just about close below, okay? So that is technically a break of structure. As we can see, it's quite messy. So this means this becomes our new swing high, right? So this is where I've drawn on. This is our valid swing low. This is our valid swing high, okay? I've just reined this in just to keep it a little bit more clear, but there was technically a boss here. So yeah, these ones are a little bit tricky to interpret in that I keep it 100% mechanical. There was a close below, so there is a boss here. Just drawing it across just to keep it clean. So this is my swing low, and this is my swing high. But in the back of my mind, really, I would like to kind of see price commit past that. But for all intents and purposes, this is a demand zone that caused a change of character. We've seen that aggressive retrace, and what do we see? We see this corrective price action coming back into this level. Now, when I first initially did my forecast sort of pre-session, obviously I only have about 20 minutes, half an hour or so to kind of look and see what's happened during Asia, kind of make up my quick forecast, then try and make some notes and post it in the Discord. Like, it's always going to be quite a rough and ready forecast. And sometimes, like when I see something like this, I don't really have a high conviction or confidence in anything I'm seeing at this point, because, obviously I can see there's a bit of a supply chain here, supply being respected, price coming into here, it's starting to sell off. Okay, maybe, we're just going to have another dump and just continue this and kind of sell off here. Well, that's one forecast. Do I kind of want to get involved in trying to trade that move, like selling against this demand here? I mean, it is a weak low. I expect it to fail, but, we haven't really had a pullback up to premium supply just yet. There's every chance that this could be the move that continues that pullback. We're not at a nice area to want to be selling into demand, right? It's not well priced at all. So that's not really something I'm interested in. Initially, I wasn't really that interested in the buys because, like I said, right, this small bearish internal structure could continue. So I wouldn't have super confidence of buying from here initially, or at least on first look. So this is kind of where I was like, well, ideally I want to be selling from here. I'm not really too sure about this messy price action here. Maybe just let's see if it sells off. We get the boss, okay, then we can wait for a bullish IBOS or a chock, and then we can start to play the pullback, right? That's when the longs are going to become a bit more high probability. So essentially, when I saw this, I just didn't really see much to work with. So like, okay, just sit on my hands and wait for a bit more development. And I'll do this, I would say probably a lot more than some people realize. I don't actually have a very immediate, clear conviction of what I'm looking for a lot of the times. But as that Frankfurt volume starts to kick in, as my coffee starts to kick in, as you have a bit more time to be looking at charts and sort of analyzing things with a bit more time, things can become a little bit more clearer as you get a bit more price development, as you see a bit more volume kicking into the market of what those more immediate intentions are going to be for that session, right? So this is where then with a bit more time I can go, okay, well, we've had a swing breaker structure, and even if you don't classify that as a boss, right, it's still a big sweep. There's every potential we're going to have a bit of a deeper pullback up to these premium levels of supply. So we've had this push up here, right? And then we've had this small corrective pullback within here, right? So this essentially is what I would view as your small internal structure of the pullback of this larger internal structure. So the larger internal structure is this high here and this low here, okay? So what do we expect? We expect this larger internal structure to be bullish, to do what? To facilitate that swing pullback up into the swing high, right? That's the expectation. And then what do we expect? We expect this larger structure to then shift bearish. We get a bearish IBOS. Okay, when then that happens, that signals the end of this larger swing pullback. And then we expect those bearish internal ranges to hold until it takes out the swing low, okay? And that's essentially what we're looking at with the larger internal structure. So we've had that first initial impulse up with the large internal structure. And now it looks like we're in this phase, potentially where we're coming into here to at least have another break of this weak high. Why is it a weak high? It's weak because it's failed to break the low, right? And then we can look for at least this move up to this level, and potentially maybe you'll get another one maybe, and so on and so forth, right? That's the framework we use. But in order for that large internal structure to pull back, what has to happen? Well, this is where you get that smaller structure, which I've drawn here in the orange, right? Where you get those pullbacks. So what will signal that this larger internal pullback is finished, that large internal high low is forming, and price is now ready to take out this weak high to get that next leg? What will signal that this pullback is over? A bullish IBOS of that small structure, right? So that's the last high, that's one leg down. If we can get a break of that then signals that this pullback is over, and then we would expect this small orange structure to stay bullish until it takes out this weak high. And that can become our target, right? If that happens. So we can wait for it to switch bullish, then look to try and catch these strong high lows until we take out that high. And once we take out that high, then what do we expect? We expect a pullback, or potentially the swing structure could take over and we could get that swing lower high in place. Okay? So that's kind of like the framework in which we can use here. Just delete this manually with the internal structure, right? Cool. So I'm just going to draw that on quickly. I just kind of want to do it with a blank chart so you guys can kind of visualize that a little bit easier. Okay, so we've got that high there, so that low, that would be a high. We break down, we have a low, and then we have a high, right? And then I would see that as just one leg here to the downside, right? And then we pulled up into that strong high. So potentially at this point, I'd be thinking this is a weak low, right? And we may break down and close below that, right? Which is a key point, which I'll get into in a minute. I just want to draw on these little IBOSes here. Okay, just so you guys can see it. All right. So at this point, basically trading within this small internal range. And like I said, right, I'm looking, we now have these green dots here. I'm looking for these green dots, this green structure, let's call it, the small internal structure. We want to see that shift bullish, right? Because if we get that shift bullish, what does that signal? It signals the end of the pullback, and then we'd expect these small structures to stay bullish to take out the large weak internal high, right? Because we're trying to capture this movement here. That's essentially what we're working with. Now, do you have to wait for that if you want to get long? No, of course not. Or do we have some other confluence? Well, we have a bullish change of character. See how that low was taken, which means this then becomes our fractal high, right? So that becomes your bullish change of character here on the M15. So we've come into this extreme demand. Is it the best demand in the world? No. It is a weak swing low, but because we haven't yet pulled up to premium supply, we know that we can get that deeper pullback, right? Up to these levels. We've come into this demand. We've had a bullish change of character coming into session open. So you now have this demand level here that caused that bullish chalk. So if you really wanted to get in, right, you can see you've got a bit of a demand chain there, right? That's already being mitigated. This would be your extreme M15 zone, right? Which you could look to get longs from. The problem with this, or the lower negative confluence of it, like I said, right, is this internal structure is bearish. We've come into that high, we mitigate the supply. So now for me, this is a weak low because it's failed to take out that small internal high. So this depends on how much you love the overall setup, because you can still buy from a weak low if you have high conviction based on other confluence that potentially you're anticipating that it's going to hold and we're going to break out. But you never know that. You can't assume that. By definition, this is a weak low. It's a weak internal low because it hasn't broken the internal high. So that's why this is a lot more risky if you want to take longs from within. It's going to be down to your own risk tolerance, how aggressive you want to be, and how much you like everything else, right? How much you like this level, whether you think there's a high potential we're going to get that swing pullback, etc., etc., etc. Okay? Whereas, so I didn't have a high conviction. I didn't really like anything I was seeing, and this is where I was waiting for a bit more, right? Because we could easily just be rejecting from here and going to the downside. Okay? Now it's going to drop down to the M1, kind of talk through this because there was a clean M1 entry model, but let's play price forward a bit and see what happens. So we're moving along, kind of chopping around, coming into Frankfurt Open now, right? And you can see a fair bit of volume coming in. Then we shoot to the downside, right? Chop around for a bit. And then we break this high to the upside, okay? Now, for me, I just see this as messy price action, chopping around in the middle, right? I'm seeing the internal structure is bearish. We're coming off supply. We've got demand here. I'm not really sure which way it's going to break out. I'm just sitting on my hands because I don't have high conviction, okay? But if you did want to, look for longs from within here, could you justify it? Well, we haven't reached M15 demand, so one, I already wouldn't like that. Can you refine it to the range? Okay, two, well, we haven't mitigated that, so yeah, I really wouldn't want to be pushing it. But the thing that you do have in your favor is the actual larger demand range here, which we're just going to use to draw for green, right? You can see how that order flow shifted, right? And prices come out of that range, mitigated it into here, is mitigating orders from within here and going off. Is that enough for me to personally to take a trade in this instance? No, mainly because of the structure, right? Well, just everything, right? There's just not enough for me to have high conviction. This is coming off here. I can see how it's coming to the range, but that could easily be inducement to then come down lower into here. Maybe then if we come into here, I'd have a bit more, then you have a lot more confluence to try and anticipate the break of that internal structure to go to the upside. It's just forcing it a little bit in my opinion. But I do kind of want to talk through the M1 entry model because it was clean. Because at this point, right, you can obviously see we've come off this M1 demand. Oops, let's use it nice and dark. Which then you can look left, go, did we come off anything? Okay, we have this supply level here. Just going to hide this for a minute. We have a sweep of liquidity, which is obviously real nice. And then you have the chock to the upside, which is also the M1 boss in this instance, which is, I love it when that happens. Nice clear break of structure here on the M1. We have a flip because you have your M1 supply zone, right? This supply zone, that supply caused the break of the low. Price comes into that supply. So what do you expect? You expect it to form a low, right? That's what should happen. Price comes into supply, it reacts, fails to put in the low, and then demand steps in to overpower supply. So now anywhere from the top of that reaction, from here to the base of the reaction, is your supply to demand flip. Obviously, you can refine that down to the pivot. It's the unmitigated extreme, which is what I also love, right? Because you can see how all of these have already been mitigated. So now you're following that demand chain. You've got sweep of liquidity, mitigation, V-shaped reaction, chock/boss, flip, right? That's a super clean M1 entry model. It just doesn't have the higher time frames as good enough for me to want to take that personally. But I just want to talk through that in case anyone was looking at that. So as you can see, price came into here. I think eventually, did it? Yeah, there we go. That was the other thing as well, right? It built really nice inducement. coming into that POI just to make it even more higher probability. But now let's reassess, right? Because the M15 is key. You don't just want to be looking at the M1 and getting lost. Let's move this forward. Next candle, look at that. Boom. Okay, so intentions are becoming a lot more clear in terms of bullish to the upside. Right? Remember what I was saying about the internal framework, right? Come to the downside, and now we've broken and closed above that high. So now we expect that the larger internal pullback is over, and now we expect these small internal ranges to hold until it at least takes out this high. Okay, that would now be the expectation. It's not a guarantee; it's just a probable framework that we use, right? So in this instance, we would be trading all the way from this low to this high. So you do have to be cautious of there is this unmitigated extreme POI down here. However, this is a beautiful flip, right? We've come into supply, we've reacted, failed to put a lower low. So now you have this flip here. The extreme of the flip is already mitigated with this move. Okay, so then I would refine it to this level here. Now, when you've got quite a tight range, like we're working with, when the session kind of volume's kicking in, right, this is kind of just pre-London as well, typically price isn't going to pull back that deep. And like, I kind of view that, although this is the one internal range, you can see this is almost that piece of structure. Like for me, the odds of this coming all the way down and breaking this low and coming down to here and using this low as inducement is possible. But in this instance, I'm more than happy to look for longs from within this POI to get long to at least just target the high with the potential we could come all the way up to here, right? And that's basically the way I was doing it. I've got a lot more conviction now, waiting for that development, waiting for volume to kick in, waiting for intentions. I've then had a bit more time to do my analysis on the small internal structure. You know, now I have a lot more conviction that we're likely to see this move that's going to come up and take this high, right? Hopefully you can see how it's making a lot more sense compared to when price was chopping around in here, where, you know, it could have gone either way, in my opinion, at that point, right? So this is where then just refine the zone in, and you've kind of got two potential POIs, M1 POIs within this level. So you've got this zone here, right? You can just refine that to the wick if you want. Got that level there. And then you've got the extreme down here. Now, both of these are possible levels that you could look to trade from. This zone does not sweep any liquidity. It doesn't have any inducement. It's not really the cleanest of flips. Like you could argue that it flipped this level here, but for me, this supply already price came in and reacted away. You know, arguably it rejects off that wick maybe, but like, you know, it's a flip, it's off that wick, but it's not the cleanest, right? It's not like the one that we have here, right? Where you see how this is just, there's no, you know, if, buts, or maybes, price clearly comes into here, reacts and pushes away. Like that's a super strong flip in my opinion. You know, this is a bit wishy-washy. This zone, however, this ticks every single box. It's the extreme of this leg of the M15 POI. It sweeps beautiful liquidity, aggressive V-shape reaction in and out. It has inducement in front of it, and it's part of the demand chain, right? You can see that this is the continuation of the mitigations. That's the continuations of the orders. So for me, I was happy to set a risk entry on this. Also, especially as well, when you lined it up, I think I had about a 2.3 pip stop, I believe. I have to double check, but I believe it's something like that. On 934, I think was where it was. And then targeting that high just got over 8R, right? So for me, I was happy to take that. And then if price had to come into this level and given potentially a clean M1 CE, I could get at least 5R to the high, then yeah, I would have considered taking that as well, if that had happened. Okay, but you can see the difference in the confluence between this POI and this POI. This is the type of POI in which I'm going to set a risk entry on. This one, definitely not. So price comes down, nice corrective movement into it, smashes through that initial POI, and then I got tagged into entry, and I actually got, I think, 0.4 pip slippage because it took me down to 3.0. There we go. So I just moved it down like that. Now, in this instance, if you're waiting for the confirmation entry, what do we get? We get a sweep of M1 liquidity here, right? And then we get a bullish change of character here, right? Now, at this point, we have the bullish chalk basically giving us a C from that level. But if you were looking for a valid M1 demand zone to now enter on, by the textbook definition, there is no M1 demand here because this candle, if you're going to draw it on, right, the next candle doesn't close above its high. So, you know, I think I got quite a few questions from people understandably of, is this a valid entry? Can you start to look to enter here? And I would say, I mean, one, obviously it depends on your plan. If you know, by textbook definition, if you need M1 demand that causes the change of character to enter on, then no, there is no entry at this point because you would need another candle to form and close above the high. That would then give you demand here, right? And then you look for price to come into that and you're off, okay? So what ends up happening, we play it forward, because it'll be easier to talk through, is obviously price comes in. So on a lower time frame, you can see how that's going to look, right? We obviously have the demand, price has got the shock, it's come into that demand and it's gone away, right? So you don't technically have M1 demand. Now you do, right? Because where the M1 demand is now would be, you would define it to this candle. This would be the demand level because the candle closes above. I don't know if it taps into it or not. Yeah, it doesn't pull back. But that would have been like your true valid M1 demand, okay? So some people, right, once that shock occurred, and as soon as price then started to pull back in, just enter at market or set your limit however quickly you can be. That is a valid way of getting into the market. It's just something you may want to consider, take a lesson from it here. But the main point I would want anyone looking at this to take away from this, and it's something I always try to preach, is the M1 entry model is not a secret sauce, or any entry model. An entry model, for me at least, is just you're looking for timing mechanisms to see if your POI is going to hold or not. All of the work on looking to get into a trade is done beforehand. It's all about, did you get the right blue box? Is this the right level in which you're trying to capture that M15 move from, right? If you have a high conviction in this M15 POI, or whatever time frame you're looking at, you know, the POIs you're trying to trade, then the more high conviction I have in it, or the more high probability, or the decent risk reward, the more aggressive I'm willing to be with my entry model. And that's why in my own personal plan, my only rule, my minimum criteria I need for an M1 entry is an M1 chalk, right? And then all the rest of it, like the full M1 entry model, like the liquidation, the V shape, the sweep of liquidity, the flip, etc., they're now like those additional things that I just know when I'm happy to wait for them or not. But that's because, I'm, at the point where I've done the work, I have the experience, fortunately, to have conviction in what I'm looking to trade on the higher time frames, right? So in this instance, obviously, I took a risk entry. And to be honest, if I was waiting for the CE, I probably would have missed this. I don't know if I would have been quick enough, right? I probably might have hesitated. But it's more just a general lesson for you guys is, if I could be a bit more succinct here, is if you really like the higher time frame setup, the M1 chalk is literally just showing, you're just waiting for structure to slightly shift in your favor to give you confirmation that this POI is going to hold and price isn't just going to melt through it. That's literally all it is in most circumstances. Obviously, when you're playing much lower probable areas, or there's it's a bit more trickier, that's when you want to wait for the full clean M1 entry model, because it's just going to increase the probabilities, okay? But yeah, this just may be something you want to consider in future. If you see that bullish chalk, you may even just want to enter at market straight away. Essentially you've seen a strong reaction with these big candles, you've got the chalk, enter at market, cover the stop below the low, because again, you're just looking to get in, okay? But test this, try and build obviously some mechanical rules around that. But yeah, just kind of want to talk about that if anyone was confused. Essentially that bullish chalk, as it's putting back in, technically that is not M1 demand, but it's down to you, on if you're willing to use a little bit of nuance here and go, well, there's obviously demand here that's caused that chalk. I just want to get in. The timing's here. It's confirmed this level. Let me get in here. I'm happy with the risk reward, okay? But yeah, that's as much as talk about that. And I just set my full TP at the M15 nearest high here. Now, like I said, what's the expectation? The expectation is that, I keep repeating myself with the same words, is that these small internal ranges, these green ranges, right, will hold until we take out this high. And I know that, but we're counter swing trend. We're in a tight range. It's all getting a little bit messy. Like price could easily wick this high, be a liquidity sweep, use all of this as inducement, come into this level and go. Like you could get in a choppy range. It could be horrible. If I can get over 8R in less than half an hour to this high in a counter trend kind of choppy environment, I'm personally going to take it, okay? Yes, arguably I left a lot of profit on the table because, as we'll see here, right, literally the minute I got took out, I think it flew with like one or two candles all the way up to the high with some super big, yeah, there we go, like straight up, and then boom, that would have been your target. So it could have gone from about 8.5R to just over 15, I believe, right? But it is what it is. This is perfect for my psychology. This works well for me. Full TP at this level. Now, typically what I do with trading to break even is when the start of the pullback that tags me in is broken, that's when I trail. So what I mean by that is, right, let's say this is your entry zone and you set your limit here, price pulls back to tag you in and starts to move up. I won't trail to break even until the high of the pullback is broken, right? So when that breaks, okay, now I trail to break even, right, in most cases. In this instance, that would kind of be this high up here, right? But that's quite far away. I'm almost running at 8R at that point. So in this time, I kind of use a little bit of discretion. And once we broke this high here, that's when I then trail just above break even in that case. Because me personally, I'm not comfortable with running that much profit and then taking a loss. That to me would just be a bit dumb, in my opinion. So that's just what I did, just in case anyone was wondering. And yeah, that's pretty much it. So Pretty clean risk entry in my opinion. Very, very aggressive M1C in there. A little bit more advanced, but yeah, I hope that kind of clears up questions if anyone had any hesitations or doubts by that. And then obviously then we swept that high. Had an M1 chop within here, but it's not really the type of price action I would personally, be looking to trade. Now we reassess. Let's have a look at what's going on. So we failed to break above that internal high, right? So that's not a good sign. It's essentially the sweeping liquidity behind these highs. Potentially we have had that swing pullback. I mean, we haven't really mitigated anything that significant. That's well mitigated. So potentially this small internal low is going to hold. And maybe we're going to get that next leg here to the upside. So definitely somewhere if you trade the London Knoll, you could be looking for longs from within here. But obviously this setup, getting long here, is lower probability than the one that I just looked at, because price has already made its attempt at taking out the high. So this could easily continue to go up, and that's probably what I would expect. But hopefully you can kind of see the difference now, right? Its objective was almost completed, right? The green structure's objective was to switch bearish to facilitate the larger pullback. Then it's done that and it's shifted bullish, and now its objective is to do what? To take out this high, and it hasn't quite done that, so this could be another attempt at doing it. So yeah, you can be happy to trade that. It's trading London Knoll, so I'm not personally looking at it, but hopefully you can understand why this would be slightly lower probability than the one that I was looking at and the one that I took. So yeah, just to bear that in mind, but we'll have to see what's going on to New York. So ideally, what would happen is we would get another leg up here, right? We then get that confirmed internal break of structure, which then would give us our new strong internal low, and then we'd be playing within this range. But potentially, if we pull back straight away, you could look for another long up into the supply. But the main ideal focus for me really would be looking for shorts from within here, right? Looking for price to come up in here to try and take out that weak internal low. So hope you guys took some value from that, and I'll see you next one. Cheers, guys.